the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. YouTube's stuck on an old page. Criminy. Let's see what the heck YouTube's doing to me. So I can't see the YouTube. Oh, there we go. Okay, finally it's kicking in here. Anyway, hey, there's a great start to this video, eh? And FYI, everyone, I am going to be taking a break here. Probably not a bad idea to take a vacation every once in a while. It is the summer. This will be the summer doldrums. I suppose not so summer doldrumy today, though. I suppose we'll get to that shortly. But I do believe that TRI has decided that we're going to maybe reformat our offering here. Love you all dearly, and it's great to see all the participation on YouTube and stuff like that. But at the same time, too, I mean, let's call a spade, right? This is a business and it has costs. And this almost like charitable exercise that I've done over the past 10 years, it hasn't really translated into the numbers that I was kind of hoping that I'd see happen. And it might just be because I'm just not that very good at this. And that's perfectly fine if that's the way it is. So I think we are going to reformat things, retool things. I would like to continue doing the weekend show as sort of a dovetail to Grimm's offering for the level oneers, and actually Murat does the level two on Saturdays as well, or Saturday or Sunday, I can't remember. Anyway, but just an FYI, things are going to change with regard to this channel, so just be aware of that. I am going to, like I said, take a break. Through that period, I don't know whether TRI principals, the partners, are going to continue doing these videos on a daily basis. We'll see how that goes. Anyway, school term for level threeers this coming week is the final week program review. And then getting them ready for their final exams. So I will be here through this coming week, but I'll probably sort of officially go on vacation as of the end of next week. So, be aware of that for whatever it's worth. 7 minutes past the top of the hour. So I think we'll probably mark the timer here. I would like to try and do these 20 minutes, half hour, something in that area. So let's try and have this video done by the bottom of the hour. Hopefully I can try and get in there, and then we'll head on over to the after party. We can do some Q&A. We can take a look at the daily brief requests. If you are a site member, feel free to pop in questions in that daily brief request room, and we can do some back and forth. There were people that were asking questions in the lounge yesterday. I hope they posted their questions in the daily brief, but request room. But I don't know. We'll see how that goes. All right. So, as the schedule on the lower right-hand corner says, and as soon as we go through this, I'll ask Chris to minimize that, and then that way it's not on the screen later on in the broadcast covering stuff up. So first things first, not a bad idea to check in on the market breadth. And I hate to say it, but, and this is what often happens with indicators, great lesson. Our market breadth indicator actually rolled over negative here back in June, the end of June, beginning of July there. So you could make the argument that as the things like the S&P 500 and stuff were actually cranking their way higher, this indicator was in divergence. And not a big surprise where you are seeing the market itself, prices kind of playing catch up with that divergence message. We're not officially oversold yet here. So as a result, I don't know whether we're anywhere near capitulation bottoms or anything like that. In the after party, I posted it in the lounge, the TRI lounge, comments about the S&P 500 put options. I think number one, if you actually do get to the point where you understand this information, it's actually pretty obvious what's going on here today. And I have a pretty good idea where they want to take this market out today based on that options information. So we'll review that in the after party. Having said that, obviously the news du jour is driving price down, but I might argue that actually this is all pretty well telegraphed. The VIX index popping up. I think I've made reference in these public videos, but the level threeers, of course, I introduced them to options in the level three program, and more specifically, options on the volatility index actually tell you where the 1% is planning on taking the market in the future and what kind of fear they want to inject into the public. That's basically what the VIX index is a fear index. And not really a big surprise what's going on there either. So level threeers got a great lesson in market manipulation there over the past month or so. Econs, obviously the big news today, non-farm payrolls. Keep in mind that these jobs reports are heavily, heavily manipulated. And they are subject to revisions down the road. So, I suppose we can take a quick boo at the numbers. Ironically enough, I think they're still reporting 100,000 plus jobs created. So you can't make the argument that we're losing jobs, actually adding jobs, but the unemployment rate did tick up, as I think more people are sort of re-entering the job market, looking for income because the hyperinflation is killing them. But anyway, we can talk a little bit about that in a bit. The entire broader market, the price action, not really a big surprise what's happening here on the ES, especially in the context of the options. Actually, one thing that did surprise me today was the gold market and its reversal. Gold and silver stocks actually look a little toppy here. So I suppose that kind of makes sense. And, crude oil has been absolutely collapsing lately. And me barking about how I thought that there was some cyclical top there in energy prices. I have to say, man, that was absolutely spot on analysis. That was at $83 a barrel, and now we're at $73 a barrel. So mysteriously, poof, 15% of the price has vanished. Somewhere in there. I think we hit a short-term price objective, and I suppose we can take a look at those numbers in a minute. But on balance, I think that the commodity cycle is now, the Fed's getting their wish. They put the kibosh on inflation here in the short term. Question ultimately here is how much damage is actually going to be done here. I wouldn't even be surprised with this jobs number that came out today. Maybe it'll be like a white knight kind of thing. You might even find that the Fed comes out in a very political fashion if things get absolutely out of control and lowers rates. It can happen. It wouldn't be shocking. I suppose is surprising and quite dramatic is to see markets like Japan. As you can see on the screen, we had one news service is reporting Japan was down almost 10% on the day. I look at the price quotes, like the EWJs and stuff like that, and they're down about 5% on the day. Not exactly sure which number I'm supposed to believe, but ugly numbers around the board, no doubt about it. And I've often counseled this. I know it probably falls on deaf ears, but I do believe that the U.S. market is not the place to look for collapse. It's in stupid countries like China that sort of believed that this was a whole new world order and that, money didn't cost anything. And, governments have gone and done absolutely horrific, fiscal policies that have literally doomed their countries going forward. I don't know, for whatever it's worth, Japan invested heavily in the build out of China. So you could make an argument that there was sort of a resurgence in Japan on the heels of strong US econs of late. And so a lot of Toyota Motor Company, you've heard me bark about that. Those kind of names are coming back down to earth. And as a result, the Nikkei is getting wiped out. And interestingly enough, this is in the face of Japan actually raising interest rates. So actually, I even just tweeted out a chart. You want to see a chart that looks dangerous, go look at Japan. That looks extremely dangerous now. Obviously, on the weak econs out of the US, and I don't necessarily consider it weak. I said before, unfortunately, we are in a political year, so you have to always ask yourself how much of the jobs data and these kind of things is, number one, finessed by the political party that's in party power right now, the Democrats. And I even heard somewhere that the polls now are actually showing that Camilla is Filipino now. No, Indian. No, she's black. No, she's winning in the polls. Sorry, me being stupid. But anyway, so do they finesse this data? I think if I understand correctly, most of the jobs being created recently are actually out of the public sector, government jobs. And of course, that doesn't really produce anything for the economy. That's actually Chinese economics. Like, I don't know how they justify it, but something like 50-60% of the entire workforce in Canada derives their income from government. Now, how the hell is that sustainable over time? This is like MMT idiocy. So anyway, the point being that I do think that there is a bit of finessing going on here with regard to the econs of late, heading into the election. Jerry has repeatedly said that he is not politically driven, but remember, Jerry is a lawyer by trade. And when I used to be, full time in the market, we used to call lawyers professional liars because that's what their job is to do. Their job is to represent the client. And if they have to bold-faced lie to you right in front of your face to defend their client, and keep in mind, Jerry works for a cartel. And don't kid yourself, folks. These banksters, this is a cartel. It's just as bad as like the the Arabs and the oil cartel. It's exactly the same thing. So I'm often, Jerry is smooth as silk. And I often wonder whether he actually believes half of the crap that he's spoon feeding the public. But anyway, his line is that he's not going to be politically motivated. But wouldn't that be convenient if he went and lowered interest rates dramatically, giving like sort of a short-term injection into the market of enthusiasm heading into this event, so the Democrats are reelected? I don't know. Call it, can get your tinfoil hat, that kind of stuff. What is interesting, though, is the yield curve. It does look very problematic right now if you think about how this sort of works over the longer term, and uninversion, and what usually uninversion implies. So get ready, folks. I've often counseled, and maybe I'll show the chart in the after party, that the everything is set up right now that this is the absolute best economic times. So I hope you're enjoying them. Anyway, so Chris, you can put away that little mini news summary. In essence, I think I've covered everything we want to talk about today. We'll spend the next 10-15 minutes just looking at a few things in particular. And then we'll head on over to the after party. Where should we go first? We did look at the breadth, and as I said, breadth looks really, really bad here right now. Certainly no reason to be bullish. One thing, though, that is jumping out at me that I do find kind of interesting is you notice that the international marketplace is absolutely on its knees. So the country funds are officially oversold on both a short and medium term basis. Maybe we hear that there's some sort of rescue by the International Monetary Fund, or I don't know, World Bank or something like that. But just as an anecdote, and the problem here is, do we really want to get sucked into the short-term euphoria? I don't know whether that's the right word to use, but you can see Japan here down 8.6% here. This is the headline number on this trading economics. I like to use this site. I don't know whether that is an accurate number or not, but I guess, the breadth indicator here, whenever you see a situation where you have both the short and medium term both oversold like this, they're basically throwing the baby out with the bathwater. So is it a really good idea to get too sucked into that negative euphoria? Or, is this kind of going to trigger the public to act and they're actually selling into the bottom of the market, which is often the case. If we do our A, B, C, Ds, this is just off this trading economics chart. You can see, is it a good idea to get too wrapped up in the bearishness down here? Or maybe we're coming back down into Wyckoff check levels, and you just need to be patient over the next week or two and look for some sort of capitulation W bottom against these previous highs. And that actually sets up a buy signal. That's kind of what I'm thinking right now. And as I said, yeah, I mean, the destruction here, this is palatable. Toyota actually doing pretty good here. Mitsubishi down 12%. Holy sneeze. I don't know whether anybody's invested in Tokyo Electron, but down 12%. Geez, destruction here. So it's a pretty tough day over there in Japan. And I've said this repeatedly, Japan actually did really, really well through the Chinese build out. In fact, there was a huge controversy in, I think it was Shanghai. It might have been Beijing, but it's probably Shanghai. There was one developer that actually at the very top of the building that he was building, like 100-story skyscraper kind of thing. He had this big circle, which was supposed to be sort of the symbol of Japan, the rising sun. And the locals were like, I don't know whether you remember the rape of Nanking, but we don't really like the Japanese too much. Can you please take that down? Which I thought is an interesting anecdote of our society and sort of life right now. But where is the blood flowing in the market? Ironically enough, it's actually flowing more out of Japan, and you can also see too, over there in Europe, they're kind of taking it on the chin as well. Look at Australia down almost 4%. I've often counseled you that anything under 2%, the market's kind of like, man, it's just business as usual, no big deal. When you start seeing prints above greater than 2%, that's going to start catching sort of the major institutional players' attention, and obviously the central bankers. Now, the problem with all of this is half of the reason why Japan's getting his smoke so much is that Japanese are actually raising interest rates. So, and this is historic, right? I mean, this is like first time in 20 years they're raising rates. Is this part of the sort of unwinding of the international trade? Anybody who invested and got sucked into the euphoria of China, they're into that Jupiter Saturn cross, that fear cycle peak. You heard Beamish go on about this endlessly. That was the biggest sucker play ever. And I think that now, over the course of the next 5-10 years, it's just simply the unwinding of that stupidity in the market. And sadly, as I said, Japan actually did fairly well out of all that Chinese build out. You might find that they have to still see much, much lower prices. I get the impression also too, though, that a lot of this short-term movement was just the market which just went way too far, way too fast. And yes, the headline number looks horrible. And of course, this is going to have all the politicians going crazy. But on balance, like I said, all we're going to do is just like do a Wyckoff check here. And actually, the tweet that I put out was, it doesn't justify going and risking your hard-earned money in the market here, folks, by any stretch. But what I actually pulled up here was, you can see the slide through the latter part of 2021 and through 2022. This is when the Fed started to get religion about trying to get in front of inflation. and the unwinding of the crazy ass. Well, I suppose this is probably more around COVID. I suppose you could argue a lot of the inflation problem. And the irony of it all, they say that, stock prices themselves are inflation proxies. So, as we were pushing higher, pushing higher, pushing higher, it looks like, the Fed's finally gotten sort of the desired results. They're breaking the back of the market. But interestingly enough, you can actually see that all they've done here in the short term is just brought price back to a trend line. And there is that Wyckoff check level that I was talking about earlier. And notice, hey, there's a cheeky little doji gap right there. So you could argue that this was actually a launching pad for this latter part of this move. As I said there a few minutes ago, I really didn't like the look of this market since about the middle of May, June there. And, now you're finally seeing things like the breadth indicator finally sort of being vindicated, flashing warning signs that, hey, something's not right here. You're finally seeing the market sort of play catch up to that. So, I think the very simple message is probably let's maybe just cool our jets on enthusiasm for places like Japan. Having said that, could we very easily see a counter trend rally back up to fill in this, well, not fill in, but to eat this wick up top here? You know that there's a whole bunch of trap bulls there. They would love to get released. So the question is, if I can't short this here, but if we did get a nice counter trend rally back up into reload short zones, probably the upper end of value here, then, we'd probably actually set up a short trade. It seems our buddy upstairs is back here. Chris, can you hear that thumping in the background? Should I up the noise suppression stuff? All right, so we'll just change the audio settings here, just so the dickhead doesn't irritate us. And I suppose what a coincidence, this just started as I was getting the video going. So what a surprise. All right, well, hopefully trader fin trading. Hopefully you can, that went muted now. So, and also too interesting when we look at the profile, right? We've slammed into basically a node here. You might even argue that this is a small profile here. This is a profile here. So really, we're going to be asking, do we want to leave this value area or and then accept into this value area? Which, from this particular chart, hopefully, disregard the colors, just look at the nodes. And you might argue that the old breakout level there, that is basically the POC. So I could very easily see like price slam into here, and then we spend like maybe a month or so. This is a weekly price chart, 4 or 5 bars, just simply filling in this range here, coming back up, kissing this trend line from the other side, kissing the POC there, et cetera, et cetera. Fat candle body highs for trade location, right? These trap bulls up here. That's probably going to be the area I want to focus in on if I do actually think about wanting to short this. I doubt I would, but I just think more importantly, this is a pretty powerful message that the market is giving us. I don't think it actually sets up a trade today, but I do think that this is what they call an Adam and Eve top, or basically this is the top of your market here. We'll see how it goes. Like this double top has to be taken out and broken cleanly. And of course, if we draw trend lines off the top, we have to actually get W's on the other side of that trend line to actually justify being bullish. I think we've clearly traded to the top end of the range here, and then we've been rejected off the top end of the range. And I don't know how deep we have to go here. But if we look at stocks like Toyota, I think you could see a little bit more carnage here. I certainly don't think we're anywhere near an end of the move here by any stretch. Here is that Japanese stock market here. The interesting thing is there it is right there, right down 4.47%. I'm not quite sure who I'm supposed to believe here. But anyway, point of the matter is lots of destruction out of Japan, and they're kind of leading the charge down here. Do a quick review of the stock market. Not nearly as well defined of a top in the US stock market. A lot of technical damage, don't get me wrong. We've talked lots about this. Market was in massive divergence. I love the MACD indicator. I love double D's and a beautiful example of double divergence here. So there were lots and lots of messages. That double divergence actually confirmed right here, and here we are down here. The interesting thing about this move, I don't think it's done, and I wouldn't be surprised if in the coming weeks or that we still have to work our way lower. You can see the A, B, C, D. We probably need to trade back down to this level here before this is even remotely finished. You can see kind of like that Japan conversation. You can see I made reference to how I like this as a pivot for the US stock market, and I think that now actually represents major resistance. So why would they be bottoming the market here today like this? And the sad part about it, I've talked to you guys lots about this. I think actually a big reason why the market here is as weak as it is here today. I think it actually is more options related than actual econs. I mean, the econs are ugly, don't get me wrong. And unfortunately, I think a lot of people are sort of looking at these econs and going, okay, did they actually create that many jobs? If we look at the S&P 500 versus, this is the spiders. I've said this repeatedly to you, and hopefully this is just yet another reiteration. These are the puts, and of course, most of the institutions write the puts. So where the heaviest open interest in the puts are, and you can see there's like tens of thousands, 20,000, 35,000 puts right there, 535. I think that they would prefer to not have the market go out below that number, because then that means they have to pay out all of these. And that is that 535. That's this dotted line right here. What's really interesting about this too is you notice that this candle right here, I had talked to you guys recently about how there's all these gaps on the price chart, and oh, what a surprise. This is the gap that sort of started that move through the end of May there. And what happened here today? All they did was just bring the market right back down into that price gap level. This has not been filled in by a body though, so I don't think we're done here yet. But at the same time too, why would you see the market bounce here? Is the market slightly oversold? Be interesting. We've been talking a little bit about RSI studies here recently on the site. So we never did get that second W in RSI. So I don't even know whether we've actually bottomed here yet. And then also too, this downtrend line off of this top, I think it's pretty well in place. I think they're just messing around with the market here. So I really don't like the idea of somebody saying, this is the bottom, we go straight up from here. I think this is nothing more. It was really interesting to see that literally this market started its sort of climbing the wall of worry right here at about 8:30, right on the nose. Now, anybody who understands how market mechanics work, is there any sort of event that happens right there at 8:30 Pacific time, 11:30 Eastern, 4:30 European time? Is there anything that happens there that might give the Americans the green light, let's say, to start this counter trend rally and somehow get this market back above that heavy open interest level on the puts? And if I ask a question like that, I think you know what the answer is. And it's fascinating. This is like a 9-minute chart. Tesla, we'll call it a Tesla 10-minute chart. Fascinating to see. Look at the little W that came in on RSI right through that event. Nice little bull div on lower time frames. All right, you now have permission to take the market back up. So I think that actually this is highly, highly coordinated, manipulated, you might even say. Business as usual for this modern 21st century capitalism. Got to say, the longer that I participate in this market, the more I see that this 21st century capitalism is back to the days of Scrooge, Dickinsonian capitalism. Debtors' prisons are probably coming down the pike. But things like stock market manipulation to serve the 1%'s interest, par for the course, which is kind of pathetic. But anyway, it is the world that we live in. And another anecdote, NASDAQ, you can see that 8:30 event, you can see they put in a bottom right across the board on these markets. I don't know whether I believe that this is the lows. In fact, I don't believe it is the lows. But could we see a sizable counter trend rally here through the latter part of today? And then maybe a dump Monday morning to set up some really sexy buys against these lows? Wouldn't surprise me. Interesting on the earnings front, we did have a number of companies. Amazon actually came in, didn't really have that great of a number, so they're getting whacked. Microsoft, okay number, didn't, but they're getting whacked. Apple actually came in beating the number slightly, and that's the only part of the market that I actually see doing relatively well today. When we go through all our stock list, maybe I'll do that in the after party. Oh boy, it is a bloodbath out there today. So you can see, I mean, interestingly enough, we always used to have an old saying in the market, if we're going to make a low and we're going to make a pivot low, then everything will be down and will stay down. So the fact that they're actually lifting these markets following this sort of bloodbath sell-off here this morning tells me we're not done here yet. I won't go too much into the earnings conversation today. Maybe we can talk about it in the after party. If you guys have questions, just make sure to post them. But I'll just simply finish off with not a bad idea. Take a quick boo at Yield Crypto, and then we'll head on over to the after party. I did talk recently about the yield curve uninverting. So I don't know whether we need to talk a little bit about that in this free broadcast. We might circle back around and do a bit more of a report for the Sunday's show on that. We're already well over time here. I should wind this shit up here soon. So yield Bitcoin. We are now basically 19, 20 weeks into our correction. I don't see this thing finishing here. We have confirmed M's. We have no W's. Why would we expect there to be some sort of big bull market here? I've told you all repeatedly that if this is a bull, we have to see a W on the other side of this market structure or, downtrend line. And it just isn't there. So really not shocking what we're seeing here. If we look at the daily chart, fascinating how they just keep effing with this downtrend line. What once was resistance briefly turned into support, then back to resistance, then back to support. And now it looks to me like we're back as resistance. It's interesting to see that they did dump the corn here this morning, but they could not take out these lows. Does that paint a W? I mean, we are going to have to see this thing up through these highs. And if it does, then that means that we can start thinking about shots up against the highs again. So keep your eyes peeled. Interesting how there is the old highs. If this is actually a double bottom, and it's a big if right now, you can see that the market took a major punch in the nose here this morning. But if this is some sort of bottom, then this suggests that we're going to head right back up top again. And I hate to say it, this has got Peter Fink and his Aladdin algorithm. Let's screw over the public as much as possible, just absolutely destroy their lives. And then we went after the stops. You've heard me talk like that quite a bit. That's what this looks like to me, is the algos just trying to destroy the retail public as much as possible. But interestingly enough, actually, this doesn't look too bad. And because this was a V-top, we all know V-tops need to be tested to turn into M's, kind of like, there's a V-top, test the high, okay, fail, then break. This high should be tested at some point down the road. I think where the damage is being done in crypto is on things like Ethereum. Wow, does that chart ever look nasty? And Brian's crazy ass little short idea. And, the tragedy of a trader's life is you spend all this time hunting. Then you get the trade on, right? Everything sets up, reload zones, bearish momentum divergences, M's in price. You wait, boom. All right, the trade's put on, away we go. And then what do? Oh, well, shitload more of waiting. So waiting. Oh, look, the 2-to-1 level's hit. Let's take some profits. Pay ourselves for our hard work. Put your stop at scratch. And then what do? A whole bunch more waiting. And really, there's nothing to be done here. The short's on. This is the free position, so you shouldn't get hurt by this trade. If we can get our butts back above these highs, great, fine, we'll walk away, take a little bit more money from the market. But right now, this is just a paper short that's working. And I gotta say, this chart looks like poop. I don't know whether you're a fan of that ICT guy, but I actually think one of his ICT market structure failure setups came in here, and 61.8, that's my level. Beautiful short trade location. If you weren't in a short, I would have highly recommended that we actually seriously consider that level. And what a surprise, right through that FOMC. So fascinating how that damn FOMC, it basically stopped the market in its tracks again. And, the sad thing is that, like I said, I think Bitcoin, I think that Fink is basically completely in charge of that thing. I don't really see any reason to be overtly bearish of Bitcoin right now. I think it's in a massive trading range. I show you the weekly charts. I think it's just playing ping pong back and forth. And, we have actually a really big events coming up here this fall. And I think that it makes sense that these market can't really break out in the face of this huge political uncertainty coming down the pike here in November. What I would say, unfortunately, in this kind of environment is all the little names, the projects, we're going to build a better mousetrap. I think a lot of those kind of names are on hold. I did hear some stories about kids who actually raised money in the financing space for crypto development, actually went and shot their wads and risked their capital. And this is the hallmark of crypto. And I've said this repeatedly. I really don't like saying this, but it is a fact. And I don't know whether fact's the right word, but I have yet to see an actual serious crypto bottom without talk about things like suicide hotlines. And of course, Gucci sweater wearers, this time it's different. We're all going to get rich, just go and buy. This is no brainer, easy investing. That's a potion for disaster. And then the exact opposite scenario, when the kids are out there, saying I'm absolutely destroyed. There's no reason to live. I'm checking out. I give up. Ironically enough, that's actually usually the signs of bottoms. And we have not had that kind of talk in the crypto space, which kind of worries me. And of course, these charts here, this is everything except Bitcoin and Ethereum. We just got another big fat freaking sell signal there, folks. I'm sorry. And we actually drew up these charts a while ago. And a while ago, I've been saying, there's a hell of a lot of reasons to look for price to come back down here. And I hate to say it, but until we actually start seeing some serious W's coming in here, and now we've got to get W's on other sides of trend lines, you can see how the market tried to break out. Again, perfect reason. Do not take trades at trend lines. That's being rejected. And, best case scenario, we back up against these candle body lows, and this is a reload zone of this range. 2.618, fog and bombs, all that kind of stuff. We hold, then we turn back up. Great. Phew, dodged a bullet. Worst case scenario, and you never know how bad this stuff gets, but worst case scenario, we still have quite a ways to go here to clean this market up. So it's kind of a shitty end to the broadcast here today, but I'd rather just, call a spade and just give you the straight goods. This is not a market that you want to be like rip-roaring bullish about. This is I'm from Missouri. If you really are a bull, show me the W's. And until I see those W's, we had kind of an attempted move through that July 4th holiday weekend. There was a little smattering of a rally. And then that just stalled out. And unfortunately, the bull has been put back in the box. Sorry, folks. And hopefully the market proves me wrong. But I would be just going very, very tepidly. Of course, if you're a little old lady, there are a bunch of names that I'm more than happy to just nibble away. But I mean, you look at this chart. How many M's do you see on this chart now? I see M's all over the place. If you're a little old lady, then it's not really that big of a deal. You're just nibbling away, doing your thing. But to actually be overtly bullish, and if anything, this kind of chart here was what I was worried about. If you went and chased this market and bought up top here, you might just absolutely have your head handed to you. This might not be a short. It may not be a good idea to get too overly bearish. What I would just simply say is, just draw your reload zones. And if we can get back down into like Brian's favorite fib, then that's probably a buy window. Oh, what a surprise. That's going to be what we like to call a TRI, our shark setup. And I think that's actually a really good hallmark of exactly what I'm seeing in the market right now. All right, folks, I think I'm going to leave the free broadcast at that. I was only, 15 minutes more than what I said I was going to be. One of these days, maybe I'll get good at this. I don't know. Hope you enjoyed the offering. Unfortunately, it's not really the best, most bullish, most enthusiastic report for you. But at the same time, too, I don't ever want to be called a shill. I don't ever want to be called some guy who's blowing smoke up your ass just to try and get you to buy some sort of bag that I'm trying to sell and take profits on. I just want to give you the straight goods. And, they always say trade what you see. And you tell me, and this is probably a perfect note to end on. Are you seeing M's or are you seeing W's? That, my friends, unfortunately, is the state of the market right now. And until we start seeing W's again, I think it's in all of your best interest just to cool your jets. There's no hurry here whatsoever. All right, everybody. Have yourselves a great rest of your day. Let's head on over to the after party. Trader in trading. You want to come on over to the after party and ask those questions? I'll be more than happy to look at HUT and the rest of the crypto stocks. You're probably not going to hear the most bullish of reports, but nonetheless, we can talk levels there. And also to some stocks that are absolutely getting destroyed today that I've had my eye on, and they're finally down into my buy level windows. So if W start coming in on these things, I'm going to be in there buying like crazy. But holy crap, it's taken forever of patience to wait for those levels to finally happen. So in a weird sort of way, I'm actually quite pleased to see what see happening here, because finally I'm starting to see prices come into levels that I can actually consider buying. So go figure. All right, have yourselves a great day, afternoon, evening, weekend, August, summer doldrums. Although ain't no summer doldrums here today, that's for sure. Slow and steady wins the race. PMA for the win. Hugs and kisses. Remember what your number one job is, especially in this kind of market state. And of course, don't take no wood nickels. All the best. Bye for now.